and welcome to Markets Today. I'm Lata Venkatesh. With me is Sonia Shenoy. It was a day when the markets saw almost bloodletting on the streets, as it were. This is the 7th consecutive day that the markets have fallen, and today the fall was seminal. Some important support levels have broken. Now it's a challenge whether the markets can genuinely recover and give us another pre-budget rally before the budget. Hi, Sonia.
Hi, Lata. Yes, and one of the key concerns was the way earnings have panned out. So post L&T's disappointment today, there was that sudden slide on the downside. There's a reality check that the market is getting now, in the latter half of the earnings season. But we'll tell you all about that and more. There was complete mayhem this Monday on Dalal Street as the Sensex fell nearly 500 points due to weak earnings, poor global cues and worries about the Aam Aadmi Party gaining in the Delhi polls tomorrow.
Dalal Street reported weak earnings today as the standalone profits fell 15% to 1,060 crores, while the company cut its order flow guidance to 15 to 20% versus 20% earlier.
And in other stocks, weak numbers from the likes of Tata Steel and GAIL seen in the frontliners, while in the mid-caps, J&K Bank and Apollo Tyres fell about 12 to 18% post-disappointing earnings today.
Well, those are some of the headlines from the market, and here are the experts that we have lined up on the show for you. Market perspective from Sandeep Bhatia and Atul Suri. Adrian Mowat of JP Morgan will also walk in to talk about the global picture, and we will get to the managements of some of the companies that declared their quarterly earnings, notably Larsen & Toubro.
All right, but first up, let's tell you about a couple of stocks that moved today. In fact, it was the 7th straight day of weakness, as Lata was just pointing out, and very disappointing day from the word go. So we started off with weak earnings. We had the market was pretty much spooked by what came out of the Delhi exit poll results as well, and then we had weak global cues from the likes of the European markets, etc. All of that was a nasty cocktail, which resulted in almost a 500-point downslide. But I think the biggest sentiment drag was the way earnings panned out from some of these heavyweights like L&T, Tata Steel, GAIL, etc. All these stocks contributed to a big downside from the frontliners. And then you had some other heavyweight sell-off like SBI, ICICI Bank, TCS, Tata Motors. All these stocks were down anywhere between 2 to about 4%. On the flip side, the saving grace was some of the defensive names. So pharmaceutical stocks like Dr. Reddy's and Sun Pharma did well, while Infosys, Wipro and HCL Tech from the technology space also bucked the trend today. But the true earnings impact could be felt in the mid-caps. So look at the way some of these stocks bled. J&K Bank was down 18% post a very weak set of numbers. Apollo Tyres down 12.5% after weak earnings. Jet Airways numbers were lower than estimated. Stock crashed by about 6%. And a couple of other mid-cap laggards included the entire banking space. OBC, Bank of India, Union Bank were all under tremendous pressure. Also, Lata, I reckon ahead of the announcement tomorrow on the political front, a lot of people were offloading their positions.
Oh yes, I think the exit polls clearly indicated what we have to expect. Exit polls have had a fairly decent record of being right, except perhaps in the 2004 elections. And lately their record in at least calling the direction has been impeccable, and all the polls have indicated a victory for the Aam Aadmi Party. So notable among the losers today were the infrastructure guys. Tata Power and Reliance Infra, the two power distribution companies in Delhi, expected to get some of the negatives if the Aam Aadmi Party were to persist with some of its power cost policies or power cost reduction policies. As well as Sonia was pointing out, there was a big gash in the PSU Bank Index. Now, this is part of the overall beta taking a hit. A large number of beta stocks, including infrastructure stocks, did take a hit, and the PSU Bank Index was quite clearly one of the many, because there was no fresh bad news for PSU banks except Corporation Bank, which is a small bank, and with a 12% rise in GNPLs, it was not much worse than the Barodas and the UCO banks. So it was not fresh bad news as much as just high beta getting sold off. The clear difference came from the capital goods sector, where Captain L&T had severe reverses. Actually, the markets were never in doubt about the quality of Q3 earnings. They held on bravely simply because the flow of money from global markets is strong and there is always the expectation of a pre-election rally. Now, the flow of money is there, but at even at these lower levels of 8,500, it has not been it's not seen any reversal. It's not yet become a strong flow. It still remains a minor negative. And add to that the slight doubts over political certainty of the BJP government, there was a recipe for taking off some risk from the table.
All right, so on that note, let's get some market perspective out of the way. Sandeep Bhatia of Kotak Institutional Equities expects to see a pre-budget rally despite slack in earnings. However, he believes that the market can give returns of 18 to 20% on positive macro cues. Listen in.
There could be a pre-budget rally. You could have lots of hopes building up. I think the real challenge will be for this market to go through the slack earnings period that we are going to witness over the next 6 months, and then see whether the momentum in GDP, which is what we require, the momentum in capital investments by corporates, the momentum in consumption by the households, whether all that comes through or not. Here it is either a delivery of earnings expectations or a disappointment of earnings expectations that we'll witness in the fourth quarter of the calendar year. So October to December will be a crucial period. The broader world macroeconomy should hold up, and that would be a better situation to be in. If that happens, then India would probably see double-digit returns coming through of 18 to 20% by the end of this year. So I think the global macro and India's own growth revival path will converge probably in the second half around September, October. If the market corrects, it is because the fact that we've gone through an earnings season, that earnings season has not resulted in any major earnings upgrade. In fact, the consensus is that earnings will come through only at a later stage, which is why the markets may have a correction. Also remember, there will be just one more state elections, which is in the state of Bihar, somewhere in the end of October, if the schedules of elections are held on time. Probably that election will go BJP's way, and we will see what happens. In the run-up to that election, the politics will also be interesting to watch.
All right, that's for the medium term, but now for the day's action from the futures and options space, let's go across to Nigel D'Souza.
Well, in the derivatives market, the Nifty has been getting sold into, and that's been the case over the last few trading sessions. Today as well, just looking at the options data, it's not looking very good. The Indian Volatility Index, that one was up by more, close to around 6 to 7% odd. While call writing is make you money, and that's been the case over the last few trading sessions. So the 8,800 call, we saw the premium fall from around $100 to around $50. The 8,700 call as well, the premium over there fell from around $150 to around 80 rupees odd. While now the 8,600, that level is going to be a firm resistance for the Nifty, because the 8,600 call, it's the aggressive writing today. The premium fell from around 210 rupees to around $120 odd. Low level put buying as well is evident. So the 8,300 put buyers today, they made money. The premium spiked up from around $32 to around 58 rupees, while the 8,400 put as well did see some buying interest. The premium over there as well moved from around 48 rupees all the way to around 85 rupees. The 8,500 put, now that becomes a very, very crucial level, because today there was mix of activity there. There was some buying, but there was some writing as well evident in that particular level. The premium there, remember, moved from around $70 to 120 rupees. So in the near term, the 8,400 level should hold out, because the 8,500 put has the highest open interest on the put side as well. Take a look at individual stocks. L&T was the stock that got sold into the second half of trade, and that's what broke the back of the Nifty. We did see Unitech, Reliance Power, both those two high beta counters were getting sold into. But from the word go, Apollo Tyres posted a disappointing set of numbers. That stock was being aggressively sold into. Other stocks that were in focus in otherwise a weak market was Sun TV, when in fact we did see some kind of buying. There appeared to be some kind of a short squeeze as well on that counter, while Vocard, big star stock, that stock in fact ended high by close to around 7%. Decent amount of open interest built up as well.
All right, Nigel, thanks for that. But the stock of the day clearly was L&T. It disappointed the street with its third quarter numbers. The margins tumbled for nearly all segments, while the net profits missed street estimates. Not just that, they scaled down their guidance as well. Pragya Bharadwaj is here to take us through what went so wrong this quarter around. Pragya.
Well, you know, everything that could go wrong with the numbers seems to have gone wrong this time, and this could be one of the worst quarters that L&T has reported unless the management clarifies in the con call towards certain one-offs, etc. The biggest fear of the street has played out, something that we've been highlighting for a long time now, because even though that order inflow number looked really good, the asking rate was extremely high despite 34,000 crores worth of order inflows that the company reported on a consolidated basis, and that led to the cut in the consolidated order inflow guidance from 20% down to 15 to 20% of the company, and that is why you saw a lot of selling pressure on the stock price as well. If you talk about the consolidated numbers on a net sales basis, the revenues were higher just by about 9.7%, profit growth of just of about 8.8%. The problem with the numbers was also that on a 9-month basis, the consolidated revenue growth is just about 10.1%. So it's at the lower end of the band which the management set out in Q2, where already they had revised their guidance downwards. If you talk about the segmental results, infrastructure segment, which is 40 to 50% of the company's revenues, there we saw a revenue growth of about 22.5 odd kind of percent. But barring the services segment, which is roughly IT, financial services and developmental projects, all the other core projects of the company seem to have reported a big revenue decline, anywhere in the range of 20 to 55%. So big crash seen there as well. Not just this, the infrastructure margins this quarter seem to have taken quite a bit of a beating. So they've broken their quarterly run rate of 8.5% down to about 7.5%. That should not also go down well with the street tomorrow morning. On the standalone results, where we had polls to actually compare the results to, on pretty much all the parameters, the results were a big miss, led by very poor execution and some working capital pressures that seem to start reflecting in the results. Net sales growth of just about 4.2%, so very dismal there. The margins are down to about 10.5%, so that's substantially lower than 11% what the street had as a floor for the margins, and profits also down by about 14.5 to 15 odd percent. Management commentary remains extremely cautious. While there is some order inflow traction that we are seeing on the domestic side, but at least on the international front, there are real problems that we're starting to see in the numbers. So very, very poor showing by L&T this quarter.
Thanks a lot for that exhaustive and comprehensive analysis, Pragya, even if a bit pessimistic. And now let's hear it out from the L&T management itself.
While the slowdown in investment is for sure, how it's going to pan out is going to be a matter of strategy of the respective sponsors. We do believe deep sea is going to definitely take a longer pause than near shore and onshore. Likewise, the mid and downstream will have some implication because of the meltdown in the realization. So we have to actually wait and watch. At the moment, what we are witnessing is some kind of pause in hydrocarbons. Sectors which are yet to really take off is power, minerals, metals, because the issues of coal block reallocation, the mining ban and all the controversies surrounding it. Roads is not going to see much action in the immediate term because the PPP model needs to be revisited. So what is seeing traction is some transportation infra, some amount of metros and airport related work. Water and renewable energy is seeing some traction. Power transmission distribution, because investment in distribution is seeing some traction.
Well, the revised GDP numbers for FY15 were just announced. Let's go across to Ekta and find out more.
Well, the big headline that came in from the CSO this evening is that we are working or possibly looking at an FY15 GDP of 7.4%. This compares to 6.9% in the previous fiscal. Now, a lot of the constituents were revised. So, for example, now the CSO estimates that agri-growth or agricultural growth will come in at 1.1% versus 3.7% in FY15. Industries at 5.9%. Services at around 10.6%. Manufacturing expected to grow to 6.8 versus 5.3%. Similar uptick expected for construction and mining, etc. Mining, for example, is expected to grow at 2.3 versus 5.4%. The quarterly GDP estimates were revised as well. So, for example, we grew at for Q1 FY15, we grew at 6.5%. For Q2 FY15, we now grew at 8.2%. And for Q3 FY15, which is basically the December ended quarter, we are estimated to grow around 7.5%. So that means that there will be a possible slowdown that we could expect in the December-ended quarter versus Q2, because 7.5% compares to 8.2%. So overall, it means that it was possibly higher growth. The reason why a lot of economists were puzzled was because the data did not really match up with what we are seeing in terms of auto sales, etc. One of the explanations that we got was from Dr. Pranav Sen, who mentioned that the reason for that is because we saw more value additions in the GDP as opposed to volume.
Well, thanks for that, Ekta. Time now to get some global perspective. Adrian Moat of JP Morgan says there are a number of tailwinds for global markets going ahead, and he believes that among emerging markets, they expect Indonesia to perform well.
I think things are generally looking quite good because we've had a fair number of central banks in the emerging world cutting interest rates. You've got an environment for local equities in EM where policy rates are down, currencies are competitive. I think you're going to see a good story when it comes to margins as people factor in lower input prices, slightly lower financing costs. Right. And one would hope with the cuts in interest rates and the benefit of lower oil for consumers that growth is picking up as we move through the second quarter. Places like Thailand have given us a compounded return over the last 5 years of 13%, which is actually just in line with the S&P. You know, the Indonesian story, I think, looks very good. And what I quite like about that is clients are reasonably skeptical about Indonesia, you know, looking at the fact that it is a commodity producer, you know, less convinced on the politics than they are in India. And I think they're going to be proven to be incorrect in being skeptical on the Indonesian story. I think Indonesia will be a very strong economy this year. The politics moving in the right direction, and returns should be very good.
All right, those are the markets that Adrian Moat is bullish on. We'll do one thing, we'll take a short break, but coming up, more market opinion, and we'll also tell you about the stocks that were buzzing in trade today.